Hello, Volker. This is Glitch and Volker from Wealth Lab. We are getting together today to record a video about this YouTuber that we found, Rayner Teo. Is that how you pronounce it?
Yeah, Teo, yeah.
He's a very popular trading YouTuber with 1.7 million subscribers, only slightly behind us. But we are going to check out one of his claims here, a Bollinger Band trading system. Plus 1,689% uh, over the last 22 years. Let's see if we can duplicate this system in Wealth Lab and back test it. Wealth Lab is all about testing out ideas, right?
Yep, that's what it is. And that's what
So,
we are here for.
so yeah, our goal is to convert this system that Rayner published into Wealth Lab and back test it and see how it does basically. So Volker,
Yep.
you are familiar with the rules of Rayner's system here, so maybe you can guide me through what the rules are and I can implement it here in Wealth Lab as we speak.
Yeah, I mean it's so simple that you can use drag and drop. I know you usually use C sharp, but this is really easy. So the first rule is first you have to know we buy at limit. That's the first thing. So
Okay,
it's a buy at limit system.
so I will go
Um,
to building blocks and then create a new building block strategy. Click that button and we get a new strategy with a buy it market and a sell it market. So I'm just going to remove those, because you said we are buying at limit. So I'm going
yep.
to drag over buy at limit. So here we go.
Yeah, and then you buy 3% below the close.
Okay, so that's simple enough.
Yep,
Percent 3 below
the
the
close.
closing price. All of our standard price series are up at the top, open, high, low, close volume, a bunch of average price. So we say close. So there is our buy at limit 3% below the close.
Yeah, and here's the next one. The close has to be above the 200-day moving average.
Okay, so we need to add a condition to this buy limit. The close has to be above the 200-day moving average. So we use indicator, compare to indicator.
Yep.
So in these building blocks, indicator means not only indicator, but you can also use any of the standard price series, open, high, low, close volume as indicators. So we're going to say close is greater than the 200 bar moving average. All right, there we go.
Yeah, and here comes the next thing. The close has to be below the Bollinger Band, the 20-day moving average, the 20-day Bollinger Band with a standard deviation of 2.5.
Okay, so that sounds like another indicator compared to indicator. So the
Yeah.
close has to be less than the lower Bollinger Band.
Yep.
So that's BB lower. And then you said it was 20-day
Yeah.
and
And 2.5.
2.5 standard deviations. Okay, so there's that condition. Close is less than Bollinger Band lower of 20 and 2.5. So what's
And the close
next?
is above the 200-day moving average, and then we buy at limit 3% below the close. And here comes the exit. We sell after 10 days. That's the first exit rule.
Okay, so for that we'll use our sell after n bars. So we sell after 10 bars.
Yeah, and the next rule is if the 2-day RSI crosses above 50, that's when you sell on the next day
At market open.
at market open. Yes.
Okay, so we have a second possible exits, sell at market, and what was the condition?
The 2-day RSI has to be above the has to cross above 50.
So indicator crosses
Crosses.
value. So the RSI 2, very short-term RSI, crosses above what? 50?
50, 50.
Okay, so there we have it.
That's it.
That's it.
And
So, yep,
yeah,
go ahead.
and it was tested on the Russell 1000.
Okay.
And from here onwards, it gets a little bit. I'm not sure. I don't know the exact money management rules, and I don't know whether he used the survivorship or whether he was using the current Russell 1000. All unknown.
Mm-hmm.
But the Russell 1000.
And is there any kind of prioritization of which trades to take in this
I
Russell
didn't. I didn't
1000?
see that. I didn't see that. I think I saw another video where he was using some kind of a or prioritization, but I didn't see it here. No,
And any information on the position sizing?
no, can't remember.
Can't remember. Okay, so we'll go with our 10% of equity position sizing on the Russell 1000 for 22 years. That's what he
Well,
meant.
you can use 23 years because I think the video is like a year old. So let's see. Let's see how he did in the last year.
All right, so we'll run it. So this will take a little while to update the data, as you can see below in the status bar. Actually didn't take that long. It is now running the back test. It's loaded 1005 symbols. Oh,
Yes.
you know what? Actually, I'm using the Norgate data here. So
Mm-hmm.
this is actually using only the current Russell 1000 symbols. So we do have a
Mm-hmm.
profitable strategy here, but let's change this to use the Russell 1000 current and past from Norgate. So this Russell 1000 current and past has the survivorship bias in it, so it will only use the symbols that have gone in and out of the Russell 1000 over time, rather than using whatever the current Russell 1000 symbols are right at this very.
Which is kind of an optimization. If you only use the survivors, you already have basically neglected every stock that went from top to bottom.
Right.
So
So
this is more realistic now.
yeah, that this one will be definitely much more realistic, and it's now testing with 2,600 symbols. So all of those other symbols that have left the Russell 1000 over time. So let's see how that impacts our 11% annualized return. So we can see it now chugging through this history with all of these symbols. 22, 23. So we're down to 8.8% annualized return. The benchmark SPY is 6.4. So actually, the strategy actually did outperform SPY. I mean, and over the period, our back test is showing about a 550% return over that period. So it's not, kind of what was Rayner like kind of saying his return was there, 1600.
Well, can we check how many positions we have not taken because of our money management?
Sure. We have not taken 1400.
About
Yeah.
1,400 trades. So what if we reduce the position size a little bit to get all the trades? I mean, that would be
I don't know if we'll be
maybe
able
it.
to get all of them. I
But yeah,
mean,
okay, but getting more of them.
sure. but I'm curious, what was Rayner's? Let's take a look at the browser again here. So
1600.
1689. So I mean, we are not seeing that. Who knows? Maybe he did use only the current one Russell 1000 symbols. Maybe he used a different position sizing. Um, I mean, however, that said, I mean, the results actually aren't bad. So I think, the strategy in and of itself looks pretty decent. And you wanted to reduce the position size to what?
Yeah, let's say it's like 6% or
6.
something.
Okay, we'll change it to 6. So we don't have to load the data again. The data's already loaded. So all we are now doing is running the back test again. And let's take a look at how that impacts the annualized return and the number of trades. So the number of missed trades before was about 1,400. And now with the reduced position size, we have about 1,000 missed trades. So it was able to get more of the trades,
Hmm.
but still missing 1,000 of them. And it reduced the annualized profit to
Yeah.
6.7%. So it had a negative impact on the strategy, reducing the position size.
But I mean, in the drawdown is okay. I mean, look at in 2008 when when the market was going down, it was still going up, and even in 19 to 20, I mean, it did have a drawdown, probably the largest drawdown, but it was still, not as bad probably as um, as the SPY, for example.
So why don't we give it a little bit of margin, maybe 1.2 at 10%. Let's see what that gives us if we're able to squeeze a little bit more out of the 10% position size.
Hmm.
And after we do that, I want to try changing the Bollinger Band standard deviation. Let's uh, let's see what it looks like with what is the deviation set at now? It's 2.5.
Yeah, it is at 2.5,
And what,
and
yeah, maybe we try it at a standard like 2.0.
yeah, let's try it at a standard 2.0 and maybe even reduce the percentage a little bit. Well, it's seems to be pretty trading a lot already.
All right, so let's go back to the design surface and change our Bollinger Band indicator. Let's make it 2 standard deviations instead of
Hmm.
2.5. And
Yeah, before you go ahead, don't click it yet. Can we take the 200-day moving average out? I just want to see something. Just pause it for this next run.
yeah, we can disable it
Yeah,
so it
and let's see
won't.
how that goes now. I mean, I think that could make a change already, my thinking.
All right, here we go. Let's see what we get. Let's look
Probably
at the
get more trades.
change
Yeah.
the change in the equity curve here as we cycle through all of those 2,600 symbols again for one more time, one more back test of Rayner's idea here. Wow, look at that.
Wow.
Well,
Yeah.
so
Yeah.
I mean, we have a kind of a hefty drawdown here though. So we're now, hitting like 50% drawdown. So maybe we should get rid of this margin for one.
Yeah.
First of all,
Yeah.
let's go back to like a normal margin and let's run that again. Let's see. But with those changes, we have our annualized return up to
26%.
26%. Yeah, almost 27. Interesting.
Yeah, that's a big move. So unfortunately, we don't know now whether this was because of the moving average or the standard deviation. But
Well, we could leave
yeah, it's
that to the
just
viewers to try
yeah.
both of those variations and see what works. But 27.8% return with 1,100 profit over those years. So we're getting closer
Okay.
to what Rayner, had. We didn't quite, meet his claim of the return that he was seeing, but still, I think it's a pretty good result. Let's look at our monthly returns here. We've only had like we've had 3 losing years out of all that time. So I think that's pretty good.
Yeah, I think it's a good start, and yeah, there is some value in it. Definitely, I think everyone should go and try it and play around with it. I think that's change the markets, for example. That's what I did actually. I already did it, and I don't want to spoil you guys. Try it yourself. I'm not telling you all the fancy things that I've done.
And
Maybe we do that in.
how can they
Yeah.
try it? Let us save this under sample strategies, and let's call it. Or why don't we
But I
just
mean,
call it Rayner BB Low? There we
yeah.
go. Let's give credit to the person who created the strategy. We'll save it in our sample strategies folder, and if you install Wealth Lab 8, you will then get it in your sample strategies. How about that?
Yeah, sounds good. Excellent.
So yeah, get Wealth Lab 8, install it, go to your strategies, your sample strategies folder, and you will find it there. You'll be able to test it out yourself. In the standard Wealth Lab install, you will not have these data sets. These are from our Norgate extension. So let's take a quick look at that. If we go to the Wealth Lab website, we go to extensions, and here we have, down here we have our Norgate data extension. They're one of our partners. They're a very respected data provider of historical stock market data, several international markets. So if you're serious about backtesting, I would definitely recommend getting a subscription to Norgate Data and then installing this free extension for Wealth Lab. You'll be able to then test on the Russell 1000 without survivorship bias, just like we did.
And you can try the S&P 500 or right away with Wealth Data, by the way. So
yeah, that's true. In Wealth Lab, we do give you already some data sets that are survivorship bias free. They are in this wealth data folder right here. So you do have a handful to start off with that already come with the product. So here we go.
Dion, if you save it now with the S&P 500, because people might not have the Norgate data, if you save it now in the samples with the S&P 500, then people would be able to test it right away, right?
Done.
Yeah. So no error message.
Cool. So yeah, let's run it on our S&P 500 for wealth data. Let's see how those results look.
Yeah, and I mean, I cannot stress out enough how important it is to have survivorship bias-free data. Well, I think that looks good too, right? I mean,
Yeah, not
there's
too
that
bad.
drawdown.
Not bad. So there you go. There's Rayner's Bollinger Band system. So the bottom line is it looks good. We didn't match his backtest results completely, but you see now how you can take an idea, implement it in Wealth Lab, test it for yourself, and see if it works or not.
Yep. See you next time, huh?
All right. Yep. Thanks, everyone. See you next time, and see you on the forums. Bye.